Welcome to the Holistic Accountant Podcast. The aim of this podcast is to demonstrate that many issues that your accountant deals with are multifaceted. Therefore, a holistic accountant's job is really to not only help you improve your business, but also help you improve your personal financial position. Before we get started today, I'd like to ask two favours. Firstly, if you enjoy this podcast, please share it amongst friends or colleagues that you think will all equally get some value from it, and or leave a rating where you listen to this podcast. It would help us tremendously. Secondly, if there are any topics that you're interested in, please let us know. There's an email address in the show notes that you can just drop us a quick email and ask us to present on a particular topic. Okay, let's get started. Okay, so today Mena and I would like to talk about how to tell whether your accountant isn't doing a good job or not. And it's a really difficult thing to tell, particularly if you don't really understand what your accountant's doing, and also you don't know what you don't know until you know it, of course. So to make an assessment can be quite difficult. We find that poor quality accountants tend to fall into sort of two categories. The first category is the category of accountant that realises they might not be so fantastic at their job, and their fee levels reflect it. So that is that they're quite cheap. And the problem with a really cheap accountant is you get what you pay for. Part of the challenge with adding value for or adding value to clients is finding the time to really take a high-level review of a client situation, ask yourself questions like, what can they do better? Is this the right thing to do? If you don't have that time and space and all you're doing is rushing to the next job just because you've set the fee level too low, of course, there's never going to be any scope to really add value. So that's kind of the first category of poor quality accountant. The second category of accountant or poor quality accountant is one that charges a premium. So they tend to be on either ends of the spectrum, really cheap or quite expensive. And the problem there is that you're paying a premium, but you're not getting a premium service. And in a way, you're paying twice because you're paying a higher fee, and they're missing opportunities for you to be able to minimise tax or optimise your situation or really receive any sort of value-added advice and so forth. So it can be difficult. So sometimes we use, in the absence of any other way of measuring quality, we often use price as an indicator. Unfortunately, I guess what I'm saying, when it comes to an accounting relationship, price isn't always a great indicator. We've seen situations where clients are paying double the fee, twice as much as what they should, and getting really half the value, and a little bit of a challenge. So I guess we look to other ways of kind of measuring or indicating whether an accountant's not doing a great job, and maybe you can take us through some of them.
Yeah, definitely. So being in the industry for a long time now, we tend to find certain repetitive errors that when it comes to identifying whether your accountant is doing a good job or not. The first one is how your business is structured.
Yep.
So, for example, you could have a company operating your business, but the shares of that company or the units in your unit trust that's operating your business are owned by you personally. Now, it doesn't make sense in terms of estate planning. It doesn't make sense in terms of business succession. It doesn't even make sense tax wise because You're going to end up with all the profits in your personal name, paying the highest marginal tax rate. The second thing we tend to find is that there's no distribution strategy and no investment strategy, and I think this is where you come into play as well, Stuart. Is that we find companies with a whole bunch of returned earnings in them. That's an asset protection risk for one. And number two, there's no clear direction of what to do with those funds. So you can end up having a whole bunch of Division 7A loans, which are interest bearing, and you basically have the money stuck in the actual company.
It's really not a case of something you need to think about at May or June every year, is it? I mean, you've really got to have a strategy, so a longer term strategy on how you're ultimately going to start distributing profit. And I guess what we're saying here is if you've got a trading company or trust or whatever it might be, a trading entity that has a lot of cash in it and retain profits, it can be a sign that you don't have that distribution strategy, and all you're doing is delaying a tax problem or compounding a tax problem, which makes it even worse.
Yeah, that's right. And the third thing that we typically find is that there's no exit strategy. So when we know that clients are winding up businesses or, looking at selling a business down the track, there needs to be discussions well and truly in advance as to how you're going to structure that, who's your potential buyers and how you're going to do it, whether it's going to be an earn-out arrangement of such or is it going to be a straight sale? Are you still going to be involved in the business? How's it going to work in terms of your retirement? All these kind of conversations we tend to find that, if you're not having these conversations with your accountant, then there's a bit of a problem.
Yeah, and this came to light more recently. I was working on a client and he just mentioned, he wanted to sell his business within, he's not actually a client of ours, a friend, a family member, in fact. He's going to sell his business in 5 years' time. And then when we got talking about different things, worked out that in fact he could... firstly, that his business was poorly structured, which was kind of a good thing because it gave us an excuse to fix the structure. And if we fixed the structure in advance, if we fixed it now and there was a very small window of opportunity for him to be able to do that, and if we fixed it now in advance of him selling the business, it would save him, I think it was about $950,000 in tax. So almost an extra $1 million in his pocket. Just by making sure that things are structured and that people are thinking a little bit further in advance, not just really year to year. And certainly his accountant's really poor. So in a way, it's worked in his advantage, I guess, at least to this point. But it should never have got there. So what do you do if you think your accountant's struggling, or you don't feel like you're getting the right advice from your accountant? Well, it's tempting to think that you can just go to another accountant and say, look, review my stuff and give me a list of things that are a problem. The reality is that most accountants aren't going to want to do that. It's time consuming. And most accountants are really focused on looking after ongoing clients rather than doing piecemeal work. And the last thing you want to do is start picking a fight with another accountant and have them on the phone to you sort of complaining about what you've said and why you're wrong and why you're right and so forth. I think a much better way of doing it is to really follow your gut. If there's some signs there that your accountant's not doing a great job, then the likelihood is they're probably not doing a great job, in which case go and get yourself a referral to another accountant. So I would seek out someone in a similar position to you that's really happy with their accountant and ask them who they're using and get a referral that way. And then when you meet that new accountant, the chances are that your gut feeling, as I said, are right. But when you meet that new accountant, you can say, look, I want to switch. Here's all my stuff. What do you think? Where are the holes? What would you be doing differently and why? And then I think that's a really good entree and a really good way to begin a relationship. And it reaffirms, whether you should be switching as well. And I find that approach to be really the best way. Okay, that's it for today. Until next week, bye for now.